In a video a couple of weeks ago, we had this guy that has trouble paying his private health insurance in retirement. On the other side, we have this extremely handsome guy that is also in the private health insurance, but not worried one single bit about his costs in retirement. Why not? Because my private health insurance will save almost 100,000 euros for me before I retire. So one of the biggest myths about the private health insurance, it's cheap when you're young but expensive when you're old, is certainly not true for me. And not true for you either if you do it right. So let's see what you would pay for public health insurance and for private health insurance in retirement in this PerFinEx Health Insurance video. In case you're wondering what these two numbers are, the blue number, almost 320 billion euros, is the total amount of all seniority savings of people insured in the private health insurance that you can see on zukunftsuhr.de. This number will be especially important for us today. And the orange number is how much the seniority savings of the private health insurance grew since the start of the video. Let's see how much the private health insurance is getting richer until the end of the video. All while public health insurance is losing money. The government put 17 billion euro of our hard-earned tax money into the public health insurance this year, expected to grow to 27 billion euro in the next 2 years. And that's just tax money that comes on top of the up to almost 1,000 euros a month that you are paying in premium for the public health insurance. So the public health insurance is getting poorer by the second, and the private health insurance is getting richer by the second. That is a fact that any one of you can double check online yourself. And you can react to this now in 3 different ways. You can scream and shout and hate the entire German healthcare system, or me, even though I'm just a messenger. And go ahead, if that makes you feel better. Let it all out in the comment section, but it's not gonna change anything. You can think that a unified German healthcare system, the Bürgerversicherung, will rescue the public health insurance when they get the blue number in the bottom. But that's not gonna happen because 2/3 of our German government are in the private health insurance. And they're not gonna hurt themselves. So if you ask me, the only option all of us have is to prepare ourselves in the best way that we can, personally, because none of us is gonna change the German healthcare system anyway. And the proper preparation is always better than simply complaining afterwards. At least in my humble opinion. Right now you are in one of those 3 categories. You are a forced member of the public health insurance, you are a voluntary member of the public health insurance if you earn more than 66,600 euro gross salary or are self-employed, or you are in the private health insurance. One of these 3 options. In the public health insurance, you pay 14.6% of your gross salary plus another, on average, 1.6% in additional contribution for health insurance. On top of that, and this is what many of you seem to forget, there is care insurance. PV, which is getting more expensive in July this year. With kids, you will pay 3.4%, and without kids, you will pay 4%. That's the incentive for you guys to make more kids in order to keep the pyramid scheme going. So for the very first time in German history, you will pay more than 1,000 euros a month for the public health insurance as a voluntary member. As a voluntary member, you can also switch to the private health insurance, not as a forced member, because they're forcing you. That's where the name comes from, you know? I pay for my private health insurance 266 euros. That is 241 euros for my health insurance plan, plus 24 euros for seniority savings. We'll come to that later on. On top of that, I also pay roughly 60 euros for my private care insurance, so 325 euros in total, about a third of what I would pay in the public health insurance. How much would you pay for private health insurance? It depends on the coverage you want, the exact plan, your age, and many other factors. You can book a free meeting with us right here, and then we can find out together which health insurance in Germany has the best plan for you. This is the situation today. Now let's fast forward to age 60, because we want to find out what we will pay for health insurance in retirement. With age 60, nothing happens in the public health insurance, while private health insurance is getting cheaper. Earlier we established that I pay 10% extra in seniority savings. 24 euros a month in my case. That goes away with 60, so my private health insurance will get 10% cheaper. Let's talk about the seniority savings a little more, because I just got a letter from my insurance in March. So far, I accumulated 11,777 euros in seniority savings for health insurance, plus 1,118 euros for care insurance. So a little over 13 euros in total over the 6.5 years that I'm in the private health insurance. Now, if you divide that number by what I'm paying for my private health insurance, you'll see that 52% of my private health insurance premium gets saved for my retirement, which is a ridiculously high amount. And this goes to show you the point that I'm making in our videos all the time. Choose a high quality insurance and you will benefit from that long term. If you choose a insurance in the first place because it's cheap now, you will regret that later on big time. Now let's come to retirement at age 67. If you are a forced member, you have the right to join the public health insurance for retirees. The name is not that sexy, but the payment might be, because you pay only 7.3% plus additional contribution of your public pension. So if you get 100 euros a month from the German public pension, you would pay roughly 9 euros for health insurance. The public pension is basically taking over the 50% that was previously paid by your employer, but only for the pension that you get from them. If you get 100 euro from your company pension, you would pay the full percentage of that. No 50% bonus here. Also no 50% bonus on the care insurance. You pay the entire percentage. But at least income from dividends or rental income is free of health insurance as a forced member. That is not the case if you are a voluntary member of the public health insurance. In that case, only 50% on your public pension, the same as earlier, but the entire percentage on all other income. And when I say all other income, I mean all other income. You get 100 euros from dividends, the public health insurance takes about 16% of that. You get 100 euros rental income from your investment property or from other pensions, 16 euros for public health insurance. And of course, you pay the entire percentage of care insurance as well. So actually 20% of all your income, no matter what it is. That's not fun, is it? In the private health insurance, your premium would first get cheaper because you don't have to pay for sick leave anymore. I don't have it right now because it's voluntary and I want my health insurance costs as low as possible. Until last year I had 50 euros sick leave per day and it was roughly 30 euros a month. If I'd still have it, my premium would get another 30 euros cheaper with 67. On top of that, all the seniority savings I accumulated would be used to keep my premium as stable as possible, which is what many people fear so much, right? That the private health insurance gets crazy expensive in retirement. Well, here's how premiums increased over the last 10 years. Private increased by only 2.8% over the year and is getting richer and richer, as you can see in the bottom. And even though public health insurance increased by 3.4%, they are still losing 17 billion euro this year, if you remember from the beginning. I would be worried a lot more about rising premiums and decrease in coverage of the public health insurance than in the private health insurance. Because remember, in private you have seniority savings, the blue number. And if we complete my personal calculation, which we had earlier, I have 402 months until I retire. So if my health insurance continues saving the same as over the last 6 years, I will have a little over 81,000 euros in seniority savings, which my health insurance uses to lower my health insurance costs. Right? And with a life expectancy in retirement of 20 years, that would mean my health insurance gets 338 euros a month cheaper in retirement. Nice. And of course, 50% is paid by the public pension, just like in the public health insurance. Before retirement, 50% is paid by the employer. After retirement, 50% is paid by the public pension. Now you know why I'm not worried one single bit about rising health insurance costs in retirement, and why you shouldn't be either if you have a good quality private health insurance right now. Let us know if we can help you with that. Happy retirement, everyone.